Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a very good weekend and a very good day of trading as well. And in today's markets, guys, well, the slight little pullback does continue. Although we did have some decent rotation in the markets today, the SPY and the QQQs ended largely red. Now, there wasn't really any macro or economic news events over the course of the day, just some normal price action. However, we do have a number of other economic events this week and very large earnings to watch out for as well. So I wouldn't say that the volatility is out of the question for this week just yet. So in today's video, guys, we're going to look into a few things together. Number one, we're going to go through our major technical analysis rundown of our major market indexes, followed by our big tech names, and see how they are shaping up leading into this week. And thereafter, guys, lastly, we're going to conclude with a glimpse into my portfolio and see the couple of trades that I've put on for the week. So without further ado, guys, let's get right into today's video. So SPY down about 0.24%. The QQQ is getting hit the hardest here, down about 0.97%, but we did have some good rotation in financials, and healthcare wasn't down too much either. Keep in mind, guys, that is the one thing that I always keep an eye out most closely is the rotation in the markets. It is one thing to stay ultra focused on the QQQ, guys, but if you don't know why the rest of the, or what the rest of the market is doing, then you may get a little bit fearful when you see the QQQ down this much. Always keep an eye on your heat map and on the rotation across the markets, guys. It is the one biggest piece of advice that I can give anybody for a more holistic view of the markets, right? Where we have to start drawing big red flags is when all of your major sectors, QQQ, financials, and healthcare are all dropping at the same time. That is synonymous with a fear-driven sell-off, guys. But when you only have the QQQ pulling back ever so slightly, and you see that most of that is responsible from semiconductors, rather, and we know that this week's going to be big for semiconductors because of NVIDIA, well, you have to take it with a little bit of a grain of salt, right? Especially when you see the bottom half of the market performing quite well, which today they did. So big tech, a little bit mixed. Semiconductors really red for the day here today. Nothing much was spared in semiconductors, guys. Almost the entire list across the board. Even such a solid company like Broadcom AVGO was down 4% today. Probably a lot of timidness leading into NVIDIA earnings. A little bit of context for NVIDIA earnings, guys. NVIDIA has delayed their Blackwell suite of products for an additional 2-3 months. So that is going to be something that's kind of an overhang during the earnings, right? We may get very good earnings from NVIDIA. They may really dispel any concerns about their growth rates moving forward, but that delay may just be a slight little overhang, which may prevent the stock from rallying in excess of 10%. We're usually sometimes used to seeing NVIDIA rally 15-20% after earnings. I don't think they might get it this time around, guys, just because of the macroeconomic environment we're in right now. We know that semiconductors are slightly a little bit out of favor, especially through the remainder part of the year. 2025 should be good for them, but that Blackwell delay may just be the one little red flag that even if NVIDIA does have a good day after earnings, maybe they're only limited to something between 5 to 10% gains, right? It may not be a picture perfect, pristine report just because of that slight delay. But then again, guys, it's anybody's guess. We will definitely see what happens on those earnings. Bottom half of the market, however, financials performing nicely. Credit cards are up. Healthcare not doing too bad. Fairly mixed day. Defensive, Walmart's, Costco, Procter & Gamble, Coca-Cola, Pepsi, stuff like that doing absolutely very good today. Energy up as well. Utilities, basic materials. So the bottom half of the market really doing most of the lifting today, which really prevented your SPY from having also a minus 1% day with the Qs, right? Moving into the one-day relative, guys, you'll see that very mixed market once again. Energy leading to the upside, halfway pretty much mixed market, and to the downside, of course, technology and consumer cyclical. Now, in terms of the 1 week, guys, well, with such a substantial drop on the Qs, technology and consumer cyclicals now deep, well, not deep, but still in the red on a 1 week relative performance, guys. So we will see what happens over the course of this week. A little bit of context for your macro data. We do have GDP coming out on the Thursday session. Keep a close eye on this number, guys. If it comes in close or slightly softer than the expectation, well, the markets will probably be okay with that. What we need to pay attention to is if this number comes in far below the expectation, maybe around 2.1, 2.2, that would definitely signal more economic weakness, more fear potentially in the markets, and the markets may not react too well to that one. And then on Friday, we have our PCE inflation report. I'm really not expecting any more nasty surprises from inflation to the upside, right? Well, we've heard it from pretty much every single company in the stock market right now. Consumers are pulling back on spending largely, and a majority of them are doing the exact same things, just pulling back on consumer discretionary spending, big ticket item spending. So truly, we can't really have a resurgence in inflation, guys, if nobody is spending money. Now, of course, there's still a few sectors that are sticky, such as services, especially housing services, which are slower to adapt to the shift in economic landscape. But as a whole, I'm not really expecting any more surprises from inflation. The key reports moving forward over the next month or two are going to be anything related to jobs and anything related to economic performance, such as GDP numbers or manufacturing output, things like that, right? So now moving in, guys, let's jump right into our technical analysis portion of the video. So let's cover SPY real quick. So we can see SPY, even though it did have a slight red day, we did not lose any levels. This is still a very nice tight range of accumulation here at the top end of the market. Volume was still a little bit low this morning, but that's obviously because, guys, we have a very big day on the Wednesday session. We know NVIDIA can move the market and especially shift the entire sentiment in big tech. If they have lackluster earnings and their growth comes into question, expect some very bright red sell-offs, not only in semiconductors, but maybe even in some of the quote-unquote hyperscalers, which are known from as your, in other words, magnificent seven names, right? The companies that are spending the most amount of money on semiconductor installations right now. So those are going to be big earnings, guys. We also have CrowdStrike, Salesforce, Abercrombie and Fitch, another one of the high flyers for the year. We'll see if they can continue their growth as well. And then on Thursday, a few other notable names: Dollar General, Lululemon, Ulta Beauty, Marvell, another semiconductor name. So definitely not a as big of a week as, let's say, the week where we had, you know, Amazon, Google, Apple, and Microsoft type of thing, right? But still a fairly charged week. This should probably be the last large week for your earnings cycle right now, right? So moving into the SPY, in terms of the tightening range that we're having right now, guys, it's looking pretty good. I would pay special attention, though, to this line right here. 554.80, call it rough number around 55, right? This combination of 4 days worth of lows. Now, if we do lose this section, guys, without making higher highs, that will be a confirmed daily downtrend leading into a little bit of weekly consolidation. But we know that after a 100% retracement, the bulls have a lot of space. And where could they potentially come down into for that consolidation? This little green box right here, which on the daily is between 546 and about 538. So I wouldn't rule the bulls just out yet, even if they do lose this, right? We still have a large area of support, and we do still have the potential inverse head and shoulders for the market. Now, if you want my thesis as to where we're going into rate cuts here, guys, over the next couple of weeks, right? We know that there is still a decent amount of data to be had at hand here, right? We just got Jackson Hole. We're getting GDP and PCE this week. Then we get the jobs openings report, otherwise known as the JOLTS report, non-farm payrolls, another jobs report, CPI in the middle of September, retail sales, and then in the third week of September, this is when you get your rate cuts. So not too many data points left before then, but still some interesting ones to be had. My thesis for this market in the next 3-4 weeks, guys, is we probably can get some continuation of an upside rally leading into rate cuts. However, I do personally believe, and this is not me saying I have a crystal ball or anything, this is just my thesis, right? My thesis is that we can get a rally in rate cuts leading up until the time when we do cut rates, and then the rate cuts will actually be a sell the news event. Number one, because any rate cut made by the Fed will be criticized at this point. If they only do 25 basis point cuts, then at that point, people will say they are not doing enough. They are falling behind the curve. And in the contrary, if they do a 50 basis point cut right out of the gate, people are going to criticize the Fed and say they are too far behind the curve. Now they're nervous, so they're doing 50 basis point cuts, right? In not very few situations in my mind can rate cuts actually be a bullish event for the markets. If anything, I think that bullishness is what's being priced in now over the past couple of weeks, right? And maybe what's going to continue to be priced in throughout the next couple of weeks, right? And then obviously we have the rate cuts and then election uncertainty. And usually the month of September is not known to be the best for markets as a whole, even into early October. So all that combined, in my humble opinion, guys, can lead to volatility in roughly 3-4 weeks of time. I would not be surprised. But once again, guys, just my thesis. I do not have a crystal ball, which is why I always say on the channel, guys, if we are trading, we need to take things one day at a time and take the opportunities when they present themselves to us. Moving on to the QQQs right now. QQQs looking very good here today, down about only 1%. The reason I say they're looking very good here, guys, is because we really haven't done that much damage, right? Really only flushing the lows of last Thursday's day of trading. So that being said, guys, daily uptrend right now is somewhat under jeopardy. If we were to lose these lows, daily downtrend right now, well, technically speaking, we are still looking for a daily higher low right now, right? So we're looking for a little bit of consolidation on the daily, pulling back in the moving averages, and also we do have the inverse head and shoulders setup, where we might potentially be able to consolidate into, guys, especially if NVIDIA has less than stellar earnings and the market gets in a little bit of a frenzy over that, maybe able to retest right here, 464 all the way down to about 456, right? Right where we were stopped, pretty much all the way back here, previous resistance for the market, current supports. I would not be surprised if this is going to be the larger levels that the bulls seek to protect right now. In terms of the weekly as well, weekly was an uptrend. We then lost that uptrend, and the bounce size has been fairly respectable by our tech bulls. Take a look at the size of the bounce. Almost an 80% bounce. That is a very good sized bounce. It does give the bulls a beautiful chance at resetting into a daily higher low, or weekly higher low rather, and potentially resetting into a weekly uptrend, potentially after, maybe later into the months of October after those infamous rate cuts, right? So that's pretty much what we're looking at for the QQQs. If in the event we get some sell-off, guys, after NVIDIA earnings, maybe one more leg of rally, touch the all-time highs, right? Give them a little love tap, maybe come a little bit above, and then we may get a little bit more volatility. That's how I kind of see it. Moving into XLF financials. Financials not performing too bad at all today, up about 0.32%. That's where a lot of your bullishness in the market came from. Beautiful chart right here. Daily uptrend more than confirmed. So as soon as this move does top out, just gonna be looking for a daily higher low. Anything at this point above 43.60, looking for that daily higher low for a possible further trend continuation. Where is the first touch stop, guys? Well, it has to be the previous all-time high resistance area, which now is sitting about 44.10, right? So it could be a question of breakout, retest, and possibly run for financials. In the event they are not able to keep it up and we roll over on the daily time frame, that is perfectly fine. We have tons of space in this beautiful weekly uptrend right now to establish a weekly higher low and then potentially rally on further. Financials will probably be one of the sectors that responds the best to rate cuts, especially in this environment right now. So I'd not be surprised if they, even if there is a little bit of a volatility sell-off later on into the year type of thing, I would not be surprised if a lot of your financials names are able to hold up better than most. Financials are extremely well capitalized right now, especially your major banks, leading into any type, shape, or form of recession at hand. Definitely nowhere even close, guys, to 2008. 2008 versus now is literally, apples versus oranges, completely different times. Moving into XLV. So XLV also looking quite good here today, only down about 0.05%, not that big of a deal. And we know it's not that big of a deal, guys, because they have this massive daily uptrend going on right now. So any pullback at this current stage, we'll just be looking for a daily higher low for possible further trend continuation. One of the first tap areas is going to be the 12 EMA at about 153.34. In the event we take back too much and roll into a daily downtrend, just understand, guys, a little bit of weekly consolidation is highly likely after 3.5 weeks of gorgeous rally into new all-time highs. If they want to take a little bit of a breather, may just be looking for a weekly higher low. Anything above 145.36, looking for that weekly higher low. And at that point, I would be targeting this lower level right here, 151.150. A few of the names that I'm in healthcare right now is Merck. Merck is moving nicely to the upside, but a little bit slow, right? But it is still at a very good level, previous resistance, which is now support. So we're looking for a little bit of retest right here of the 120, 121 level, still in this trade. And then obviously a few others that I'm continuously looking out for is UNH. If I see UNH come back and give me a test of the 550 down about 530 level, that would pretty much be a breakout of the all-time highs, potential retest of the all-time highs, and then run. This company has such beautiful fundamentals, and healthcare usually does perform very, very well, even in the midst of a soft landing recession, potentially, right? Moving into SMH. SMH also not looking too bad despite its 2.34% sell-off. The reason I say not too bad, guys, is because we obviously still have this inverse head and shoulders pattern, which we've been calling out. So we've been anticipating a slight decrease here in price because we are in an area of resistance. 256 all the way down to roughly 248, right? Try to get through through it a few times and now unfortunately been rejected. So if we continue moving to the downside, where could we possibly stop here, guys? 238 all the way down to about 225 is that large area of support for your bulls. What we're essentially looking to do here is the bulls are trying to reset into a weekly uptrend. So we know that the weekly bounce is now fully completed at this point. Nice 61.8 retracement on that. Now we'll just be looking for a weekly higher low to possibly get back into that weekly uptrend. So we need to see the bulls maintain this lower level right here of 225. If you really break below 225 here, guys, it's not going to be looking good. All the momentum is going to be lost at that point, and you may just end up with furtherance of the weekly downtrend. Not there yet. A lot of trading left before that is going to happen, but I just want to prepare you guys to what to look out for in the event of either or scenario. Moving into IWM Russell now, 0.03% to the upside. Russell pretty much getting rejected exactly where it got rejected in the past, right? Running into a little bit of resistance up here at about the 225 down to about 222 level. That is completely normal, guys. That is your prior all-time high. So the bulls are going to have a heck of a job getting through this level, in my humble opinion, as long as there is still continued market uncertainty right now. All in all, though, the bulls are not looking too bad, still in a nice daily uptrend currently, right? So at this point, any move lower, going to be looking for a higher low. Anything above 212, looking for a daily higher low for potentially another stab at these 52-week highs right there. Not looking too bad at all. And even on the weekly, guys, the bulls have done a fantastic job. Have to give it to them, guys. A V-shaped recovery like this, especially in growth in the midst of a recession narrative, is such an unlikely scenario, guys. I would put it to pretty much 5% probabilities or under, but the bulls got it done. Just goes to show that there is still a lot of buying power in these markets, people trying to front run that growth trade. Now, in the event we have a little bit of an extended sell-off here, maybe after NVIDIA earnings, just trying to find possible catalysts for the sell-off, right? Either bad data or bad NVIDIA earnings. That could do it, maybe bring down growth a little bit. The next big area of support is obviously this 210 down to about 208 level. Just be looking for a possible higher low, maybe for either some trend continuation or at least, at worst rather, I should say, a tightening range setup. Moving into the Dow Jones right now, Dow Jones also not looking too bad, 0.16% to the upside, right? Daily uptrend clear as day on the Dow Jones right now. Where are we getting rejected? Excuse me, where are we getting rejected? At the all-time high. So set a new all-time high today, ever so briefly before retracing a little bit. In the event we have to move a little bit lower here, guys. Watch this daily higher low right here. 40,600, right? Come back too close to it, you open the door for the daily downtrend, and that would just be looking for weekly higher lows. Pretty much at this point, beautiful weekly uptrend right now, we'll just be looking for weekly higher lows, anything pretty much above 38,500, looking for that weekly higher low for possible further trend continuation. I would keep a close eye on your previous all-time highs, the ones from back here. That is going to be the next level of support. Your 12 EMA on the weekly chart is right there as well. So this could be a very nice area of confluence for the bulls to build a little bit of defense before maybe rounding that rally back to the all-time highs. All in all, though, they control the uptrend right now. We are just looking for higher lows for possible further trend continuation. No red flags as of yet. Now let's move into a little bit of crypto because we have some time in today's video. So Bitcoin, after manifesting a very beautiful rally over the course of the past couple of weeks, now starting to give a little bit of that back, but that was normal. The last time we spoke about Bitcoin was exactly after this candle. And I was saying if ever the bulls struggle to get through this area right here, 64, 65,000, completely normal. That is your overhead resistance, clear as day, right? In the event we struggle to break through it, after 3 times they couldn't get it done, probably just going to reset here a little bit lower, looking for a daily higher low for possible further trend continuation and a second attempt at that $64,000, $65,000 level. I would keep a close eye right here, guys, where you see all of these candle wicks, all these tails on these candles, and all of your short-term moving averages, they are all sitting right there. This could be a nice area for the bulls to build a little bit of support, a little bit of momentum before attacking that 64 level again. But the daily uptrend is looking not too bad, if I do admit so myself. In terms of the weekly is not looking bad either on Bitcoin, right? Start of the week, still a lot of time to be had. Still trying to find a new weekly uptrend formation. So this weekly move, guys, I would really like to see the bulls get back to about 67, 68, especially if the rest of our markets rally hard over the next few weeks, right? If that's the case, we could build potentially a nice cup and handle formation and start attacking the all-time highs. I do love Bitcoin, guys. I love it though, however, more down in the 58 to 59 level. So in the event we get a larger than expected market sell-off over the next few weeks for XYZ reason, and I see Bitcoin once again down here in the mid 50K range, that is where I'm more in tune with buying. I don't believe that there's any rush into this trade just yet, just because there's a lack of true pure form bullish catalysts remaining, right? Still a lot of uncertainty in the markets right now, and usually crypto runs the best when there is not much fear in the markets at all, such as the period we had between November and March of this year, when everybody was only focused on the AI narrative, especially in semiconductors. That poured into Bitcoin as well, and nobody was talking about the economic drawback potential, a jobs drawback potential, soft landing recession potential, right? It was just an afterthought at that point rather. But now, with a little bit of more uncertainty in the markets, that's why these growth assets can't truly run the way that we would like them to sometimes, right? That's pretty much it for Bitcoin. In terms of Ethereum right now, Ethereum also pretty much following the same pattern, trying to find its new daily uptrend, trying to find the daily higher lows and push this trend higher. I need to see a lot more from Ethereum, guys. We are obviously getting rejected right now at the $2,700 level. Very tough for the bulls to apparently break above this level right here, right? You can see it's kind of a channel. You got your previous support lines down here as well, touched it, and then been resistance pretty much now over the past month and so, right? So really need to get an eventual break above that level, guys. Only then will I be able to say, okay, the bulls finally have a decent weekly bounce underway. And then, tradition to our fashion, we always measure the size of the bounce. As you can see right now, it is still very, very weak, only about 45% worth of a bounce, so it doesn't give the bulls the best opportunity at resetting this into a weekly uptrend. If anything, it does lead me to believe that there may just be a little bit more consolidation, especially if Bitcoin cannot get it done either. Do not expect Ethereum to rally beyond this if Bitcoin is not able to rally on its own, right? Bitcoin is king right now of crypto. Moving into Apple. So in terms of our major stock market rundown, in terms of our major big tech names, right? How are we shaping up leading into NVIDIA earnings? Well, Apple is not looking too bad at all. 0.15% to the upside. Apple setting up with the bull flag right now, guys. This is a beautiful sideways portion of consolidation, but the area at which it consolidates, right? I'll give you guys a quick little technical analysis lesson. When we have a large move up like this, right? Extremely bullish move up like this, and then let's say they pull back and then do sideways consolidation down here. Does that look bullish? Does that look bearish? Well, you might say it's kind of in between, right? You're not so sure. The bulls gave back a lot of this move, and now we're consolidating kind of in the middle of the move, right? Anybody's ball game. But when you have such a sizable move and the bulls consolidate at the top of the move, it goes to show you they don't want to give back too much price. They want to keep their momentum alive to potentially get that one level break higher. So that's why I always love seeing tight ranges of consolidation at the top end of the move. Now, obviously, it doesn't guarantee that the follow-through move will be bullish, but it definitely increases our odds a lot. So Apple looking very good. I would be very mindful, however, of this line down here, guys. 223, 224. If we break that to the downside without breaking these most recent highs of 228, that would be a daily downtrend underway. And then we would just be looking for a little bit of weekly consolidation on Apple. Where could that bring us down into here, guys? Could bring us down into the 220 down to about 215 level, which would probably be the completion of an inverse head and shoulders attempt by the bulls. Well, now this would be kind of a extended disabled shoulder, I assume, but you guys understand the pattern, right? So that's what we're looking for Apple. And obviously, if we get the upside break, your next resistance target at this point, guys, is the all-time highs right around that 236 level. Myself on Apple, guys, Apple is a little bit too rich for me right now for any of my strategies. You know, I don't believe there's that much more reward to the upside versus the risk to the downside, right? So that is why on Apple, I will stay fairly conservative. Now, in terms of the weekly, we do have a very nice weekly bounce underway. As I said, any further dip, going to be looking for the weekly higher low for further weekly uptrend. However, I'm going to be looking for a potential retracement here, guys. If I can see a retracement coming down into the lower teens, right? Two teens, like 211, 212, 213 type of thing, it may free up some short puts around the lower areas like the 207s, 205s. And if I can get as close as possible, guys, to the previous all-time highs here, 200, I think that's a lot more manageable for Apple. And at that point, we'll just be looking for a monthly higher low after 3-4 months of rally. Would make perfect sense for them to come back tap this and maybe then can manifest a rally later on towards their iPhone 16 launch in the late part of September. Now moving into AMD. AMD also today down about 3.22%. Really nothing in semiconductors being spared. So not AMD's fault, really just the overall industry pulling back, right? So unfortunately on AMD right now, guys, this is a daily downtrend setup, right? Complete loss of the 1 hour, clear as day. They tried to get it back, and then this is big leg number 2. So you can see it clearly here on the daily. Daily downtrend is underway, getting rejected from this area of resistance that we were monitoring closely on the channel. 162 down to about 154, right? Huge area of resistance. Cannot blame the bulls for not being able to get through there on their first attempt. So daily downtrend is underway here, guys, at this point, right? Where are we looking for this daily downtrend to maybe bring us into? Well, I'm glad you asked. We're looking for a weekly higher low, potentially starting to retest the 141 down to about the, 128 would be the absolute low, but I'd like to see them protect this level here on the daily where I put this line, right? 137.50, guys. That is the most I would like to see the bulls give back, because already the size of this bounce was only 618. Now 618 is what we look for, but it's not a 782 like you've seen other companies do, or even something like the S&P has done, right? So the bounce is a decent bounce, but in relation to other bounces in different sectors or in indexes, the bounce is not the best. And keep in mind, the bears do control the monthly time frame at this point, so we do tend to have a slightly more bearish lean. That being said, it will free up a bunch of trade opportunities here, guys, and I did take one myself today. So we're going to be looking for trades potentially here in the mid 130 range. If we continue daily downtrending into this location, I'm going to be looking for short put plays in the mid 130s, guys. I think there's very decent value there for AMD. And just keep in mind, guys, the best is yet to come for AMD. All of their growth is going to be next year, 2025. Look, 2021 through 2024, not much, right? Very flat. This is when they've been building out and ramping their data center applications. 2025, 26, 27 is when we see the fruits of that labor. Revenue is exactly the same. You can see stagnant here for the last couple of years as they ramp up production of their data center capacity. And then those are supposed to be their best years moving forward. So getting them down here, guys, could be a very good value proposition for that potential rally in 2025. Moving on to Amazon right now. Amazon down about 0.87%. Amazon too having a slight little bit of retracement right now. That's okay though. Amazon has literally been up for 2.5 straight weeks in a row. A little bit of a pullback does not hurt anybody. What are we looking for right now, guys? Still hunting for the infamous daily higher low. Anything above 150, 156, looking for the daily higher low for possible further daily trend continuation. Now, in the event we set up for a daily downtrend and they're not able to continue that daily uptrend, well, what are we looking for here, guys? Well, we're just looking for the weekly higher low for possible weekly trend change back to the bulls, because we know they lost the weekly uptrend with this move right here. So now we need to two-step process and get it back. And the size of the bounce on Amazon was quite decent, about 61.8. So not too bad for Amazon. I would not like to see them lose the bottom end of this range, however. 167 down to 164. It is huge prior support, guys. That is your prior all-time highs back in 2020 and 2021. Now, there is more congestion below that, but to keep this move healthy, guys, we need to at most give back not more than 50% of this move right here, right? So you need to see them keep it tight and then get that trend expansion. But I love playing Amazon, guys. If we get further dip, I will be playing Amazon more heavily in the high to mid $160 range. I think there's very good value for the company down there. Moving into Google right now, Google up 0.3%. Very decent day for Google. Nothing bad to say, right? Just very, very tight price action in the most recent 2-3 weeks of trading. So daily uptrend is still underway. The daily higher low is set at the lows of last Thursday's trading, 165.18. Now, in the event we set a lower high right here and flush those lows, that will be daily downtrend, and we may just be looking at the weekly lower highs being set on Google and maybe revisiting the lows. The one red flag that for me is happening on Google right now is the size of this weekly bounce. Take a look at the size of this weekly bounce, guys. Only 38%. That does not give me a lot of confidence, guys, that the bulls have enough momentum to set up for the weekly trend change. You want to see big moves higher to give the bulls some space, give them some momentum to create that weekly trend change in motion. When we get such a shallow bounce like this, it just leads us to believe that the probabilities do favor the bears to roll over and maybe equal low or maybe even flush the lows for the continuation of the weekly downtrend. Obviously, the Department of Justice headlines for Google have not helped in the past 2 weeks, but I still absolutely love this company here, guys. In my opinion, there's nothing wrong with this. I was just checking, guys, if my microphone was good. So I was just, so nothing wrong with the company, in my humble opinion, guys. But if we do start retesting these lower levels, guys, lower 160s, think maybe 163, 162, it's going to open some strikes for some short puts down here in the lower 160s. And if for ever which reason, guys, we roll over this weekly and come back and retest the mid 150s, 155 down to 145, this is where I'm going pretty heavy on some Google, probably with some call debit spreads, maybe even some leap call options for Google. I love the valuation at the current price. Down here, in my opinion, it would be a steal. Moving into Meta right now. So Meta obviously down 1.3% as well. Nothing really being spared in big tech today. So Meta, unfortunately, was not able to complete their daily uptrend breakout and now rolling over. So unfortunately, we have lost the daily uptrend. Not yet a daily downtrend. For that, we would need lower high into lower low. So the one saving grace for Meta right now is that we're still within our previous all-time high range of support, right? It's not the best support because we barely poked our head above the area before retesting it, right? So I wouldn't say the bulls have enough momentum to protect this area, but it is something. However, if we lose it over the next few days, you can then assume that this area becomes resistance once more. And if we back test it, may just be a recipe for a daily up downtrend rollover. And then guys, maybe just rolling over slightly on the weekly too, but that's okay. The weekly bulls on Meta have a ton of space here, guys, right? 100% engulfing move. We would just be looking for a weekly higher low to potentially reset into a new weekly uptrend. This would be a weekly cup and handle. That is an extremely bullish pattern here, guys. So in the event we retest the lower 500s, think maybe 505 down to 495, I will be looking to play Meta for some short-term swing trades on them. Think possibly put credit spreads down here and think possibly maybe even call debit spreads with a few months of time to maybe benefit from that weekly trend change setup, right? So that's what I'm looking for on Meta myself. Moving on to Microsoft. Microsoft also not looking too bad here today, down about 0.79%, but still, Microsoft still not looking too bad. Give me a very quick second. There's a, you can probably hear it, there's a fire truck, my bad, give me a sec. No edits, guys. We do these raw, right? The neighborhood might be burning behind us, but we will get this content out there. So moving into Microsoft down 0.79, right? So what are we looking for on Microsoft? Very, very simply, right? Daily uptrend was underway. Your most recent daily higher low was here. Tried to push, and now we rolled over. So we just lost the daily uptrend, coupled with this area of resistance that we were pointing out on the channel. Completely normal to get rejected here, guys. The bulls got rejected a ton here in April, also in May, before finally passing through. And now, unfortunately, we have to deal with this area again. You can obviously see this massive kind of head and shoulders pattern on Microsoft as well. It doesn't look the prettiest, admittedly, right? Big possible head and shoulders pattern. But I do believe, guys, that we may not be ending up for something like this from Microsoft, right? Too solid of a company, in my opinion. Of course, anything can happen, but the probability of that happening is very low, in my humble opinion. That being said, if we were to retest lower levels here, guys, let's say we then put in a lower high, lower low, we're just going to be looking on the weekly, guys, for a possible weekly higher low for maybe a little bit of a trend change. But the bounce size on Microsoft as well, admittedly, was not the best. Barely 50%, right? A lot of other names are better, but Microsoft's fundamentals, at least, are some of the best in the game. So hopefully that is enough for them to protect this lower area of support. 405 down to about 390 is going to be that last area of defense. So in the event we come back closer to this area, guys, getting close there now, guys. One more little day of downside here, put us below 410. I may be tempted to possibly write some put credit spreads down here in the lower 390s. That could be some good trade opportunities. Or maybe if we pull back a little bit more, right, more into this area, maybe tempted to make some call debit spreads with a few months of time and try to go for this following trade, right? The stop loss is going to be below here because then we invalidate all of this entire year's price action, and then we're just looking for that eventual recapture. So it could be an interesting trade for some call debit spreads with a lot of time. Think maybe November or December, right? Got to give some time for these markets to work through the uncertainty and volatility. Moving into Netflix right now, Netflix 0.25% to the upside, looking quite good, guys. This is a daily bull flag above our previous all-time high area of resistance. So in other words, looking quite good. Breakout, retesting this, not only this range right here, guys, but the prior all-time highs we had back here in 2021. Not looking too bad for Netflix at all, guys, in terms of a daily uptrend conversion. Looking very good for the bulls. In the event we cannot get it done and Netflix rolls over into a daily downtrend, I'll just remind you what we're looking for here, guys. Looking for a weekly higher low for then possible weekly trend continuation. We might be able to see a retracement into 656 down to about 634 at that point in time. And once again, this would also be a weekly cup and handle pattern. So if it does come down here, guys, I'm definitely taking that trade. Think possibly call debit spreads, right? To keep the cost of the trade low, but still get some decent upside performance. Now, moving into NVIDIA. NVIDIA also today down about 2.25%, but still range bound. Very, very, very range bound on NVIDIA, not flushing Thursday's low. However, if we do flush Thursday's low here, guys, not that much price action left before our earnings on Wednesday. Only 2 trading days remain. So if we do come into a daily downtrend scenario right here, guys, in my humble opinion, that would be best case scenario for us if we're willing to play earnings on NVIDIA, right? If we come down over the next few days into this big area of support, 119 down to 115, few things happening right here at the same time, right? I want you to notice the similarity of these patterns, right? So prior, this whole area right here, right? Talking about March all the way through their earnings in May. Notice what happened, right? Came booming into a high setup. Then we got an engulfing candle right here, puttered around for a little bit, made a lower high, and then rolled over, rallied into earnings, and then we got a pop. This is the exact same move. Big move up into the highs right here, engulfing candle, exact same thing as there. Couple days of sell-off, trying to rally into a second high, couldn't get it done. Lower high, then a few weeks of sell-off, rally for the couple weeks leaning into earnings, rally for the couple weeks in earnings, and then we will see if past history is indicative of future performance, right? These are just patterns. Sometimes they work out, sometimes they don't, but I found it eerily similar, the chart setups that NVIDIA has going for it right now. So in the event it comes down to this range right here, guys, I want to play NVIDIA with a little bit of a bullish lean. I'm going to give them the benefit of a doubt, but I'm not going to be playing them extremely heavy. I do not think that this is going to be one of those quarters where NVIDIA has great earnings and they go up 20-25%. The environment surrounding semiconductors right now is not the best, admittedly, right? You cannot really find any semiconductor company that went up over 10% in this most recent quarterly earnings. Even the ones that reported good earnings and good guidance, such as TSM, which in my opinion had the best earnings in the entire game right now. The CEO literally said on the earnings call, we cannot keep up demand, right? He literally said, we cannot keep up demand. Demand for us is, pretty much through the roof. We have backlogged orders through the end of 2025. And what happened for their earnings? Stock was down 4 or 5%, right? So NVIDIA, growth concerns are there as well. They have the Blackwell delays as well. I'm not saying the company is necessarily going to crap the bed or anything like that, but we need to be cautious, right? Leading into these earnings, I think people might be a little bit underwhelmed as to the results. Obviously, I could be wrong, but I'm leaning more 75-80% towards positive, but underwhelming. And 25% of me thinks that those underwhelming results could be met with a downside sell-off. That being said, all of that to say, guys, right? Big parenthesis to say, if we come down to this area right here, it will free up probably short puts with the volatility 2 standard deviations away. I'll be looking under $100, guys. If I can find some premiums down here, 95, that's where I really want to buy NVIDIA. But I may throw, if you come down in here, guys, I may just throw a few call debit spreads up here at NVIDIA. The implied volatility on NVIDIA right now for just straight call options is way too high, especially if the stock does nothing or has an underwhelming move. There's going to be so much implied volatility crushed that your contracts, even if you're right for the direction, you may just end up red. So for that purpose, I'll probably be using call debit spreads, which don't really have that problem. So I will be making a slight bullish lean play for NVIDIA in that aspect, but we'll see what happens, guys. 2 days of trading left for NVIDIA, so impossible to determine short-term price action levels because the expected move for earnings is about 10% in either direction, right? Moving into Tesla now. So Tesla down about 3.23%, not the best day for Tesla. Still, sideways, slightly down consolidation, right? So we know that they have a gorgeous daily uptrend right now, still hunting for that daily higher low. Still no lower lows are set. That would be the lows of Thursday, right? So they can still have a chance of reversing this into a, daily uptrend continuation, but flush the lows of Thursday, guys. that is an official daily downtrend, and then we just go into further weekly consolidation. That is the expected scenario for myself in terms of Tesla, guys. I've been saying this ever since we started pulling back really, really hard off of this momentum move when they killed their momentum by delaying the robotaxi event. The best I feel we can get for Tesla, guys, is probably a tightening range, bound pretty much between this $230 and $200 level. That may be what we get until the next form of deliveries and until the robotaxi event. I'm not really going to play Tesla myself, only if we kind of dip below 200 and maybe it frees up some strikes down here for some short puts, guys, in the 175, 170, because that's actually where I wouldn't mind being assigned some shares of Tesla or making some, more bullish plays on Tesla. Here in the midst of a tightening range with few catalysts to look forward to, not the best in my humble opinion. Moving into Palantir right now, Palantir down about 2.93% and starting to retrace pretty much towards the target that we've labeled out, right? So this target right here is your prior resistance from 2020 and 2021. Now we know when we break out of resistance, it then becomes support. So that's maybe what we're looking for. You can see it best on the weekly time frame. Gorgeous weekly uptrend, possibly looking for the breakout. Retest of the range of consolidation here, guys, $29 down to $28. We will see how the stock reacts to it down there. But if we do start retesting these levels, guys, probably going to open up some short put strikes down in maybe the $27 to $26 range, which I think is a much better deal for Palantir, especially due to the valuation right now in the the low 30s is quite high. Even though I love Palantir, trust me, I have a bunch of shares in my long-term portfolio that I bought all the way back here because I love the company, even when everybody didn't, right? So I still love the company, but it's just we got to understand what we're paying for right now. We're paying for a lot of growth, and that's when we include their EPS growth per year. That's why we use the PEG ratio. 3.72, guys, is very, very, very expensive for any company, not just Palantir, right? So looking for a potential retracement down to this level right here. But the bulls still control everything right now, looking for a daily higher low for possible daily trend continuation. But in the event we cannot get the higher highs and roll over, you guys know what to expect. Weekly consolidation into these levels. The bulls have a ton of space, guys. Anything above 21 is just a weekly higher low for possible further trend continuation, right? That's pretty much everything we had for our daily market rundown. Hopefully you appreciated that, guys. Now let's dive into my portfolio. And there really wasn't many trades made at all today. Actually, only a few. So number one was the AMD 139 puts. This was literally featured in my top 5 options play video of yesterday, guys. The expected move for the week on AMD was, I'll give it to you right now, 147, pretty much 147.02, and you can see we're almost there. So I was telling you guys, if we can find premium in the lower 140s or high 130s, I would take that trade every single time. So we pretty much did right here. We got about 70 cents for them, guys. That is literally our 0.5% rule. So we'll see what happens by the end of the week with that contract. ASML retracing quickly back to our break even, guys. I have a stop loss at 878. So with the event it comes back, at least we sold 2 shares for our swing trade right here at ASML, exactly where we said we were going to sell them, guys, coming up into weekly resistance. So we were able to literally sell shares at the top of the move after accumulating some here, some here. We rode them all the way into here, guys. Now they're coming back to our break even. We are not in the business of round tripping gains into a loss. So we set our stop loss right here at break even. If it takes us out, perfect. We did not lose any money. Trade idea was good. Unfortunately, it just did not get the follow through up to our second profit target right away, which would have been that $1,000 mark off of some trend continuation through this resistance range, right? Everything else pretty much remaining the same. I did get assigned my shares of Alimentation last week at $80 minus a 60-cent credit, which is not here right now. We wrote some covered calls on it for this week at about, we got 51 cents, which is decent, roughly over 0.5%. Stock's not known for their volatility, so you don't get as much premium on call options as you would on something like AMD, right? But the stock is really moving very, very healthily, right? Just building a nice little range of support here at the all-time highs. I still like this company right here, even if it even if it's at the all-time highs. Fundamentals are good. Valuation is still what manageable, guys, and just the management team is insane at their execution for this company. So I trust them with my money, guys. Not too worried about being assigned this position right here. We will manage it accordingly. Other than that, there really wasn't much else that moved, right? Still a bit underwater on our Baidu bull call spreads, but tons of time on those. They're for October. The CP call debit spreads are moving nicely. The John Deere ones as well. Still have the Disneys. The other trade we made today was the Elf Beauty 141 puts. So we had a nice little drop on Elf. This was part of the bonus section of the top 5 options plays. So essentially what I do, guys, as I've told you before, right? Just go through the list and see which ones are the most red and then see, can we find some good premium way below where we are right now in a big level of weekly support. Well, we know Elf Beauty, the big weekly support, is literally down here, right? Starts at the mid 140s, down about the mid 130s. So we were able to get the 141 puts, a decent margin of error still. Elf is trading right now at about 156. That's about still 10% away, right? They already dropped 9% today, an extra 10% this week without earnings or anything. Somewhat unlikely in my opinion, but we'll see what happened. We got about 65 cents for those. Not quite 0.5%, but I like it in terms of our margin of error that we had. The rest of the positions are still largely the same here, guys. Not going to talk about every one because I talked about them last week a lot. The only other trade that we kept pretty much was the Micron. You might remember I had the AMDs that we wrote last Thursday, I think, leading into today. We closed those for pretty much 50% profit and got into the new AMDs. Those are on a different page. My bad for that. We got the Microns, still in the Microns here, 92 puts for this Friday. We opened those last Thursday, I believe, for 49 cents. They're trading a bit above right now, but I like that level on Micron, guys. Nothing wrong with Micron in the lower $190 range. That's where we do have a lot of previous all-time high resistance, which is now going to be support. And the valuation down here is a lot better, especially considering their 2025 and 2026 numbers of expansion, which are going to be very, very good. No problem for me getting assigned some shares there. And then we went with a little bit more risky one here, guys. This is what I call a lottery play. So we went with the Pinduoduo $90 puts, guys. Pinduoduo, after their earnings, they had pretty much a 3.5 standard deviation move, which is so rare, guys. 0.003% probability of that happening, right? Extremely low probabilities. If they go down to $90, guys, that would be a 41% drop off from the same point in time last week. From Monday of last week to Monday of this week would be 40% drop off. I think the sell-off is a very overdone on Pinduoduo. And the reason that I took this one, yes, we're coming into daily oversold, but the reason I took this one, guys, I'm expecting a little bit of a bounce. Why? The 4-hour RSI is crushed at 16. The 1-hour RSI was at 7 when we're trying to take this trade. Now only at 16 as well. Every single time frame, if you look at it, guys, was crushed, especially the 1-hour and 4-hour. So we're just looking for a little bit of upside continuation here, maybe into the mid 100s, 104, even a bounce back up to 110. Guys, that's going to pull all the premium out of these contracts, and we might be able to close them at a midpoint throughout the week. And then we also went, guys, with some bull call debit spreads, 105s versus the 110s for November. So a lot of time looking for that exact same bounce, right? Looking to make a little bit more money on those, however, which is why we put a lot of time on these. We got them for the 2 contracts, $1.85 a pop. So we're probably going to look for maybe $3. If we can bust above the $110 level with a lot of time, these will probably be worth close to $3, maybe even above if we can make our ways into the 112, 114 level. Those will probably be worth $3. So that's what I'm looking for, guys. $2.80 all the way to $3. That's when I'll probably close these. And then we have some pure lottery calls that I threw out today, guys. Only paid $30 for them. This Friday, 120 calls. Once again, looking for a quick day of recovery, whether that's Tuesday or Wednesday, or whether it never happens, doesn't matter. This is pure lottery, guys. I'm willing to lose all of this $30. That is why I took it. It's cheap. It could have some decent returns if the stock moves quickly to the upside. And that's pretty much the gist of things. The rest of the portfolio is moving decent. Got some nice gains on PayX, call debit spreads right here. Some decent small gains right now on UPS2. So we'll just manage those positions accordingly. But all the positions in the account right now are moving, to standard, right? No crazy outperformance, just expected performance for now. So we'll continue to take this one day at a time, guys. Sell options for the most part, right? And be very conservative with the long plays that we do take, only going for high quality companies in large areas of weekly support. That's pretty much everything I had for you guys today in the video. If you did enjoy it, guys, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to the channel as well if you're new. And as usual, guys, if you have any questions at all, feel free to leave them down below in the channel. Now, in the event, guys, I also have recently opened our Discord service. So if you're interested in joining us right now, guys, there is a lot of us in there and we were trading today, having a lot of fun. So in the event you want to have that community aspect to your trading and trade with like-minded individuals and join me, chat with myself, attend our private live streams that we do every Monday to Friday, see all of my trades. We have video exclusive content for our members in there as well. A whole different bunch of things, long-term portfolio construction, things like that, right? Really a holistic view of a wealth creation approach for the long term, not only trading. So if you want to join, guys, not a sales pitch, I'm just presenting what's in there so you guys know. I'll leave the link down below in the description. Feel free to join, and if you do, I'll be very happy to see you in there, guys. So take care, have a great rest of your evening. I'll see you tomorrow. Take care and peace.